So I want to
Got
kind
it.
of stay on track. So I want to welcome everybody uh, to um, to today's work session, hosted by DFW Veterans Chamber. And our goal here is to support veterans in all of their business ventures. Whether they're starting up. Already have a business or just trying to figure things out and just need some support in the DFW area and beyond. We pulled together a fantastic um, group panelists to talk about funding today. So, critical to any stage of business, whether it's starting up, sustaining growth, what have you. You need money to make money. And what we thought we would do is bring together some folks to talk on a broad range of funding options, which could be helpful at various stages. So, we'll be covering topics like 401k rollovers, SBA loans, conventional loans, factoring, all that good stuff. And also, we brought Casina Sheets in, who will be talking about the importance of credit scores, how credit scores are determined, and how to improve them. Because no matter what vehicle you pursue, except for 401k, because it's your money. So you just got to follow the right guidelines to utilize your money effectively for business investment without penalty. So that's a great thing. But yeah, outside of that, your credit score will be important for everyone else to help assess your viability and qualifications for these lending opportunities. So just quickly, I'm going to just give you a quick introduction of our panelists. Um, I mentioned Casina Sheets. She is a local area person, DFW, focus on lending in a broad perspective with a focus on credit score improvement, assessments, things like that. We have Marianne Burns and Nancy St. Jacobs, both with BB&T and Truist. And there are conventional bankers. So they'll be talking about some options on the conventional banking side. Tara Thomas is with Fran Fund. She specializes a lot in franchise funding, but within franchise funding, there's a lot of vehicles she brings forth, but to help fund startup businesses. So Tara will talk primarily today about 401k rollover programs, um, and we'll cover some basics on that. Um, and then we have Trace Reddick. Trace will be covering um, the topic of factoring, which is utilizing invoices to help with cash flow, things like that. I don't see Patrick Alcorn. Is Patrick, are you on? All right. Well, Patrick will hopefully be joining us in a minute. Patrick is slotted to speak to us about SBA lending and Veteran Advantage. Uh, and if he does not make it today, Tara is extremely qualified to talk about SBA lending. So we may have to do a little pivot and have Tara cover two topics for us. Um, Before we start, real quick, I just wanted to know, I would like each of you just to give me a, 30-second introduction of your background and how you heard of this call and what your focus is. So participants, that is. So we have Robert, Terry, Amy, Antonio, Suzanne, welcome.
Thanks. Hey, this is Robert Lee. So, my background is 20-year retired Air Force, and then am looking to get into the wine importing and wholesaling business, primarily starting with Portuguese wines, then moving over to Spain, Italy, Germany, and then France, ultimately as I grow bigger, starting in Texas, because that's where I currently live. Heard about you guys through, well, initially the Boots to Business course that I took about 3 years ago when I retired back in Northern Virginia. Got connected with you guys back then when I moved to Texas, but am now looking to really get started with you guys, and I saw this on your website. Thanks.
Awesome. Terrific. Terry?
Hi, my name is Terry Black. My background is in athletics as I play basketball overseas as well as at Baylor University. Also been in the automotive industry for 15 plus years. About a year and a half, I decided to start my own mobile oil change business as I seen it was a necessity, just in talking to different types of customers. For me, I guess I'm here to gain knowledge of just some of the overall things that work with marketing and then just get some ideas from other different people.
Terrific. Let's go to Amy.
Good afternoon, everyone. I'm Amy Bernard, and retired Marine Corps veteran here in the Dallas area. I am currently working with the George W. Bush Institute, working in veteran economic opportunity. But I'm also an aspiring small business owner looking to open a wine shop here in Dallas called Wine Culture. And so very happy to be on this call today to talk about how to get the funding to get the store open. And I'm also with the Dallas Chamber as their city leader. So that's how I heard about it.
Excellent.
Good to be here. Thanks.
Excellent. Suzanne?
I'm Suzanne Johns. Johns Tracy Abear Custom Homes, and we are starting a new venture. It's called Tear Down Dallas, Rebuild New. So we're looking for funding for interim construction and purchasing our tear down homes.
Excellent. Antonio?
So you caught me with my Zoom attire. I'm gonna video. Good afternoon, everyone. My name is Antonio Mata. I am a owner of a home care agency. And not only do we specialize in private pay, but we also specialize in assisting senior veterans and or spouses in obtaining their aid attendance benefit. We do not charge for that process, so that alleviates them from going to the VA office or spending months and months and months of trying to attempt to get the aid attendance benefit. I'm seeking for a small SBA loan to hire a business development manager and also to expand on the office to get away outside of my home office. And those of you who are getting into the wine industry, I will be your first customer, and it'll be well worth your time.
Excellent. See, it's already working. Let's see. We have Arnie. Arnie, why don't you tell us a little about yourself?
Yeah, good afternoon. I've got 30 years, retired from the Navy Reserve. Most of that was doing port security, harbor defense on both the civilian and the military side. So still doing that work, also including a lot of unmanned systems, whether it be aerial, surface, or subsea type ROV systems.
Wow.
So, looking for ways to fund those very non-cheap options of surveillance and inspection and whatnot into our business.
Gotcha.
On a marketing would be another thing I'm also looking for, is besides money, it's the whole marketing process, which is really frankly kicking me in the tail.
Excellent.
For those in the wine, I also have a small, not that this is part of this, but I have a small winery up in Washington State. So if you need wine,
Oh, there you go.
I know how to fill that need.
Awesome.
Love making these connections.
Oh yeah.
Excellent. Nick. Nick, you're muted.
We'll come back.
Nick's unable to talk. Nick says, "My name is Nick, and I'm the owner of a small media owner of Social Media Torch, and we specialize in social media marketing and content creation. And he loves teaching people and generating ROI on marketing spend."
Excellent. Nick, we'll reach back out with you, or reach out back out to us. Christine and myself are in charge of marketing as well as speakers to the Veterans Chamber. So we'd love to talk to you about how we
fantastic at marketing. He's absolutely fantastic. I've been working with him for years.
Oh, okay. Terrific. Ashton.
Hi, my name's Ashton. I'm actually a military spouse and office manager for the UTA Veterans Business Outreach Center. So I'm here just to gain more knowledge in regards to funding to further help our clients.
Excellent. Great. So great. Patrick joined us. So Patrick, thanks for making it to the call. Patrick is our local area VBOC representative, veteran and kind of, I would say, all around support for small business, veterans interested in getting into business, funding, and so forth. And he'll be speaking on our SBA lending and Veteran Advantage programs. Did I miss anybody else in terms of introductions or? All right. With that said, I'm going to start the program. And I will actually be starting with Patrick talking about SBA and Veteran Advantage. So Patrick, introduce yourself a little bit and then jump into an overview. Oh, and one quick thing, Christine, do all the speakers have screen share capability?
They do. For some reason you can't get to work, let me know.
So speakers, if you want to share a slide, please, you have control. You can swap and share your content. All right, Patrick. We can't hear you, Patrick. I'm not sure if your audio is off. It doesn't look like you're muted. So check your audio settings on your computer. I know you're a pro at this, so. There we go. I think I'm hearing something.
You hear me now?
Yeah, perfect. Gotcha.
Okay, they wanted me to put my headset on here. So greetings, everyone, and thank you, Irving. First of all, let me just say congratulations to everyone on their entrepreneurial endeavors and anything that you're doing to start and grow businesses. I want to remind you that the veteran and military connected community is a powerful and desirable community for the American economy. Veterans contribute more than $1.4 trillion to the US GDP. They hire more than 580 million employees worldwide. All right, so don't think that's an American number, that's a worldwide number. And they pay more than $210 billion in annual payroll. So as you veterans, military spouses start your business, just know that you are a viable and critical part of the US economy. What I wanted to share with you today, particularly about SBA and SBA funding programs, is I'd like to start by just reminding you that in the majority of cases, the SBA is not the lender, right? Only in disaster situations does the money actually come from the SBA. So in the majority of cases, the lender is actually a financial institution out there that is lending you the money, whether that be a bank, a credit union, some other type of financial intermediary, such as a CDFI, Community Development Financial Intermediary, or a CDC, Community Development Company. That's where the actual money comes from. But the SBA is really a co-signer, right? And that lessens the risk for the lender. They co-sign on domestic loans up to 85%, and they co-sign on international loans up to 95%. You can get up to $5.5 million in lending from the SBA. And I'm not going into the emergency loans that we're talking about right now, the products that are out there right now, such as the payroll protection program or the EIDL loan, which is the emergency injury disaster loan, which is available right now. I'm just talking about the general SBA loan products that are available 24/7, 365 days of the year. And specifically for you as a veteran, the Veterans Advantage Program is an old name. It's actually called the Community Advantage Program. It's been grandfathered into one program for all underserved classes. So where it used to be a Veterans Advantage loan and then a Women's Advantage loan and so on and so forth, now it's just called the Community Advantage Loan. It's the exact same loan with the exact same parameters and everything of that nature. You can get up to $250,000 on that loan through your local lender. and there's a waiver and or discount, depending upon which lender you get it from, a waiver and or discount on the loan origination fees and that whole loan process across the board. My recommendation and the recommendation of all of our SBA resource partners is that you get support and process that loan with an SBA resource partner. In other words, don't buy into all of these private organizations and private entities that are out there that say, hey, I can get you an SBA loan and I'm going to charge you this fee, or I can get you on the SBA list and I'm going to charge you that fee. The SBA has free resource and resource partners who can help you identify lenders and identify the correct loan for you and help you process that loan. Those resource partners include the small business development centers, known as SBDCs. They're on community college campuses and college campuses all across the nation. There's SCORE mentors, veterans business outreach centers, such as my office located at the University of Texas in Arlington. If you're further south in Texas, we have another one down in South Texas at University of Rio Grande Valley. And if you're somewhere else in the US, you can find your VBOC at sba.gov/VBOC, which I'm typing into, which I just typed into the chat for you. But know that all of these resource partners are free and they can help you identify the lender and help you process the particular loan. I'm going to do just a really quick screen share to show you that site for you. That's the screen you should be looking at right now, and remind me if you are. You should be seeing right now the SBA site.
Yeah, we see it.
Okay, good. When you go to the SBA site, you'll see that there's an icon there. I'm at sba.gov/funding. I'll back out real quick. I'm just at the SBA site. On the drop-down menu, I'll simply go into funding programs. And on the funding program, I've got all of these categories. So disaster assistance, that's what we're involved in now with your PPP and your EIDL loans. That's in a disaster scenario, and the money comes directly from the SBA. But the typical loans that you have for your small business are this category right here called loans. And when you click on that, it'll actually go into a link where you can find lenders. When you click on that to find lenders, you'll actually go in and you'll just create a profile describing your needs and what type of money you're looking for, your vertical, the type of business that you're in, everything else of that nature. And then it'll create and email you a list of all the lenders that actually match your particular profile and that lend in your vertical. So if you opening up an automotive repair shop, the list will come back and say, these are the lenders that are lending in automotive repair. If you're opening up a beauty salon, these are the lenders that are interested in lending to you because you're a beauty salon, and so on and so forth. If you're buying a franchise, these are the lenders who are interested in helping you to purchase a franchise. And so that list will come back to you when you create a profile. But I recommend before you go into this process and create this profile and start this lender match that you first connect with an SBA resource partner, SCORE, SBDC, and or the VBOC or Women's Business Center, because in your loan application, you're going to need a business plan. There's no need for you to create a 40, 50, 60-page business plan if Wells Fargo only needs 7 pages of that business plan. Well, how do you know? Talk to the SBDC and SCORE. They know what business plan each one of these financial institutions need in order for you to apply for a loan with that particular lender. So don't sit there and spend all your time working on multi-page business plans when the SBDC and our SBA resource partners can help you narrow it down in terms of what it is that you need. So that's my pitch, and I'll just give you the specific information on the Veterans Advantage loan. Again, that's up to a $250,000 loan and so forth. And right now they've raised the rate on that. You can get up to $1 million on this express loan and this Community Advantage loan. And the neat thing about these loans is most of the time when you get a loan from a financial institution, the loan is tied to the assets and the things that you're purchasing with that loan and the depreciation life of that particular asset. When you get an SBA guarantee loan, it's not tied to the depreciation of the asset, which means that you can get extended terms. So an example is computers have a depreciation life of 5 years. So if you were buying computers with your loan from a regular commercial lender, the length of that loan would have to be a 5-year loan or shorter. Automobiles have a 5-year depreciation value. The length of that loan, the term of that loan would be 5 years or shorter. If you get an SBA guaranteed loan, you can purchase computers and automobiles with terms as far out as 20 years. What does that mean to you? That means lower monthly payments and things of that nature. So the term of the loan. SBA loans do not have balloon payments in it. So if your loan is amortized over the full life of the loan, so if you're paying $500 a month, there is no $500 a month, and then your last payment is $3,000 to close out that loan. In an SBA guaranteed loan, if it's $500 a month on day one, it's $500 a month until that loan is fully paid. And then also the last thing is that SBA guaranteed loans, they cannot call those loans in advance. So if you got a 20-year loan, you got 20 years to pay off that loan. You can pay it early, but they cannot call that loan in advance and say, hey, I want that loan now and I want that loan here today, and so on and so forth. That loan has to go to full life unless you choose to pay it off early. So they can't make any advance requests on that loan. I hope that helps. That's the SBA Advantage and the SBA loan. And just know that for you as veterans, that loan is called the Community Advantage Loan. Amounts up to $1 million, turns out to 20 years, and you have either discounted or no fees. In other words, loan origination fees because you are a veteran. The current rates right now are at 5% fixed and so forth. Not like the disaster loans. Those disaster loans are 3.5%, or 2% if you're a nonprofit, so on and so forth. But the typical rate is about 5% and or lower on those loans.
That's great. Thank you, Patrick. Hey, real quick. So that Community Advantage loan, where do you apply for that? Is that also through the SBA, or is that through like a separate, lender, kind of like going through? I mean, the SBA doesn't lend, like you said, but where do you process the Community Advantage loan?
Okay, so all of your loans are going to be processed through the lender.
Okay.
And so once you've identified, you work with an SBA resource partner to identify the lender. And when you identify the lender, they'll bring the SBA into the conversation.
Gotcha.
And get the SBA's signature on that particular loan. But
Excellent.
You can start anywhere. You can start with an SBA resource partner. If you already have a lender that you have a relationship with, and you want to get an SBA loan, you can talk to your lender, and your lender can process that SBA loan.
Excellent.
Or you can start with an SBA resource partner. So the SBA and SBA resource partner or a lender, any one of those places can start the process. My recommendation is you start with an SBA resource partner, so you're not out there shopping lenders and going through lenders that are not lending in your vertical for your product or in your product or service.
Gotcha. Excellent. Thank you, Patrick. All right. So moving on, we're going to introduce, I'm going to introduce Nancy St. Jacobs and Marianne Burns. Nancy and Marianne are with BB&T Truist. They're going to cover the topic of traditional lending options and opportunities. So take it away, Nancy.
Thank you so much, Irving. And thank you, Patrick, for covering such a thorough presentation on the Community Advantage loan, because we do hear about that whenever we have veterans who are looking for funding for their businesses. Now I have another product that I can talk to them about. I'm Nancy St. Jacobs from BB&T Now Truist, and I am Marianne Burns's partner. We work hand in hand to help a business clients with funding in every way through an analysis process. So the way that Marianne and I work is, if either of us hears of something that a business owner is needing, we work together to make sure they get everything. But we do that through a process that we call Small Business Financial Insights, which means we gather all of their information so that we know where we're taking them. We don't want to just push products on people that they could never use. We want to make sure that we're putting them in the right product that will fund their business and to Patrick's point, sometimes a 20-year loan is not what's best for you. Maybe it is a 5-year, and understanding how everything works. So what I'm going to share with you today are a couple of ways that we've helped business owners in the past and that we continue to do because this is what's best for us. So I'm going to put myself on a 10-minute timer. You like that, Irving? And I hit start. So I want to show you a couple of ways that we've done that. And I will share my screen. Let's see. All right. There it is. Okay, so one of those ways is through something that we call a BB&T home equity line of credit. So instead of just using your home to live in, use your home as your big bank. It's your pocketbook.
Oh, sorry, Nancy, sorry to jump in. I think you're sharing email. That's what I'm seeing. I'm not seeing the flyer.
You don't see the flyer. Okay, let me start again.
Do you want me to
New share? Oops, sorry.
I think it picked up your email.
You see it now?
There you go. Yeah.
All right. Okay. So this is one of the ways that we have helped a lot of our clients. And you would think, I can use my home equity to fund my business. This is how you want to look at that. The equity that you have in your home, put it to work for you. Pay down things that you might have out there, such as credit cards. Pay them off through your home. You get a tax credit with that. Those are tax deductible interests. And I would advise you to talk to your accountant or your CPA about how that can be an advantage for you with regard to your taxes. It gives you the ability to have flexible payment options. So you could have any term that you want at an interest rate that works for you. That payment would be such a delight to have one payment as opposed to 5 credit cards and several other loans that you may have out there. Combine them, pay those off through a home equity line of credit, knowing that you could use that as an open line. So as you pay it off, pay it down, you could use those funds again. So it's like having a credit card with your home. There are no closing costs. You do have that no closing cost option. So you go straight into the loan with no out of pocket. And it's a fixed option, which allows you a fixed term, fixed rate, and a fixed payment. Who wouldn't want that? And that's on all of a portion of your line. So if you had a $20,000 line of credit, if you chose to only use $10,000 of it, that's all you're paying on. You're not paying on the full $20,000. And if you have a lot of equity and you say you have a $100,000 line of credit, good for you. But you wouldn't be paying you would not pay all of the 100,000, only the portion that you use. So I like to introduce that to clients as an option for them because it works. Any questions on this so far? I'll go ahead and show you the next option that has been good for my clients.
And Nancy, one of the things I want to point out about home equity is you can use it at any stage of your business. You can use it if you're starting a business. You can use it if you have a mature business. You can use it, so really that's flexible because it's not really a business loan per se. It's it's a home equity loan. Yes. And you can use it for whatever you want, which is pretty cool.
It's very cool. Thank you so much for sharing that, because that is exactly what we let people know, that you take advantage of that because it works for you. Whatever works for you is what's best. Tell me if you can see this. If you can't, I'll go ahead and you can. Great.
Yeah.
So typically, let's say for instance, someone just recently bought a home, so they don't have that home equity line of credit option.
Zoom into it a little bit, hit the plus button and just make it a little bit bigger.
Okay, sorry about that, guys. Now, that's better. Is that better?
Yeah, it is much better. That's good.
Much better, thank you. See, I cheated and put my glasses on, so otherwise I wouldn't have been able to read that as well. The smart business plans require smart lending solutions. And the reason we say that is because since we have so many ways that you can fund your business, we look for simpler ways that make sense to people. We don't want you to have to think overtime and go back and do some research on your own just to figure out what was she saying to me when I visited the bank. So we have some smart lending solutions that are very easy to understand. Take a look at the first one. It's called our Business Advantage Credit Line. You see the loan amounts? It's a line and not a loan. You can go from $10,000 to $100,000, and it's to meet your short-term business needs. So for instance, if you needed to purchase, like we mentioned earlier, office equipment, that's a great way to do that. You'll have that line amount. You can pay it off from 12 months to 5 years. Then we have the Business Advantage installment loan. Those are for basically equipment, is what most people use it for. If they find that they need to replace their delivery van, if they need to buy a new building to house something, to have a new office, the real estate needs, we can do anything from $3,500 to $100,000. Also 15 years for residential and 25 years for commercial. So of course, you know, you have the cottage loans that you could do for your business and not necessarily a commercial property. And if you needed to buy any type of equipment or vehicle for that business, depending upon what you do, I heard several people will be starting wine businesses. Thank you. We need that after COVID's over, right? So I'm looking forward to visiting your businesses, but you will want to purchase some equipment to get that business started. So you'll have terms anywhere from 24 to 84 months. Those are fixed payments, which is great. So take a look at those. Talk to Marianne about that. She put her information in the chat so that you can give her a call and ask those questions. And understand that when you apply for these types of loans, you'd also want to have some type of equity, collateral that shows that you can borrow up to that amount. And small business credit cards is a great way to start your lending profile with any institution. So if you have no credit established for your business and you have no business relationship with a particular bank, but you're looking at their options, one of the best ways to start that relationship is through having a small business credit card. And not long after you've had that business credit card, it is a great way to get started. Take a look at that line amount. You can get anything like $50,000 for a small business credit card option. And I've had clients think that, oh, I won't qualify for that. And I was like, let's just try. And they were approved for a business credit card. So we really do encourage folks to do that, because take a look, you get low annual percentage rates. That APR is really low. And you get cash back or travel rewards. I happen to be this cash back girl. I love seeing that the bank is paying me back every time I make a purchase. And use that as a way to start building your credit for your business. It goes a long way, because you're not using your personal credit to purchase the things for your business. You're not using your personal credit and increasing your personal DTI. You're using your business. And it helps you grow your business profile for the small business financial credit bureaus. And others can see that you've already established that, which means you're growing your business profile for lending, and it's easier for you to borrow within that and those parameters. So it's pretty simple. Once you sit down with an officer at the bank, Marianne's been doing this for a long time. I have been in banking for 28 years and primarily with small business. I basically am working with minority business owners because I'm the community business development officer. So I work with every line of business in lending as well as credit, establishing your credit, depository, treasury, merchant, and so forth. But I send that over to Marianne so that she can actually sit down with the business owner to process everything and fulfill the needs that they have at that time. So these credit lines, installment loans, and credit cards, the best way to start your business.
Great. So real quick, my understanding is that with a line of credit or installment loan, that the banks generally like to work with existing businesses with a revenue track record, whereas in this credit card, you can actually be a startup and apply for a credit card, correct?
That's
Correct.
exactly right. Oh, sorry.
Go ahead, Mary Ann. I want you to
Yeah,
continue.
I mean, normally we're looking at 2 years in business, two years tax returns. So a lot of times if the business is new with, decent credit, then you can start your credit profile with a credit card. And that way, you have some established history with the bank, you've got some credit history, and then when the business gets to be closer to 2 years, then we can look at a traditional loan or a traditional line. And I was going to add on here, we've got these loan amounts or these line amounts. That's really kind of starting out. We have different business partners that we use. If you need a line amount larger than that, we bring in other partners.
Gotcha.
So it looks like we have some questions. Should we go ahead and answer these now, Irving, or do we want to?
Why don't we save the questions for the end? Partly is because, Christina's going to talk a little bit about credit score, things like that. And so, we might have some additional information, but definitely want to save these questions for the end and make sure we cover them. So for sure. All right. Well, thank you. The next person I'd like to speak on is Tara Thomas. Tara Thomas works for Fran Fund. Again, she and her company actually are experts in franchise lending. So she works with a variety of sources. What I'm going to have her talk on today is 401k rollover, partly because, Patrick already covered SBA, but she is actually someone that can help with SBA lending, in terms of knowing what you need to do to qualify, if your franchise qualifies, et cetera. And they offer some veteran discounts as well. So Tara, go for it.
Awesome. Can you all see my screen okay?
Yeah, we can.
Okay, perfect. Just wanted to make sure. So again, thank you so much for having me. I love being able to hear about other people within the funding world, as well as there's so many different products out there, and there's a different fit for everybody. So it's great to have everybody together. Just a little bit about Fran Fund. We are based right downtown in Fort Worth, Texas, in Sundance Square. We were established in 2006 and by some veterans in the franchise industry. And while most of what we do is within the franchise industry, just because we work with franchisor partners and franchise business consultants, such as Irving, we're happy to help with non-franchise business opportunities as well. So I know that some of you have mentioned that, and we're happy to help. We are a member of that Fran. We do really appreciate everybody's service. So we are also have sponsored the Armed Forces Bowl for the last 2 years in a row. So as Irving said, we're happy to help our veterans, and we offer some discounted rates on our services. So while we do provide a number of funding solutions today, what I will be talking with you about is how to use eligible retirement dollars and invest them into your business without any income tax or early withdrawal penalty. My name is Tara Thomas. Again, I am a senior funding consultant with Fran Fund, but we refer to our program as our Fran plan, but really that's just another name for rollover for business startup, which is what ROB stands for. And this has been around since the ERISA Act of 1974. This is not a new program. This is not something that any funding provider created. It's been around for quite some time. Again, we've been facilitating this for thousands of clients across the country for about 16 years. And it allows you to use those qualified retirement dollars and invest them into your business without any income tax or early withdrawal penalty. So what type of accounts can be used? Most employers do not allow you to access funds while still employed. So current employer plans are usually not eligible. But if you have a previous employer 401k, a 403b, if you're a veteran, maybe you have a TSP, those thrift saving plans, all of those are types of retirement plans that are eligible for this program. If maybe you've moved some of those funds into a rollover IRA or traditional retirement account, traditional IRA, those funds would be available as well. And sometimes our clients will even use a combination of these types of accounts, or maybe, between you and a spouse or something of the like. So a really high level of how this program works. The first step is to create a C corporation, which is going to be the operating entity for your business. Fran Fund actually creates that corporation for you. We file within the state, do your articles of incorporation, bylaws, meeting minutes, issue stock certificates. So we really go through that process with you. And then we create a new retirement plan that is sponsored by that C corporation, your new business. And as a W-2 employee of that business, you can elect to roll over whatever amount you choose. In this strategy, because of the fees associated with the strategy itself long-term, we typically do not facilitate the program if you have less than $50,000 to invest. However, there's no maximum. I've done this for people who have upwards of $1 million to invest. So it can be 50,000, 100,000, whatever amount you choose. And in this case, instead of reinvesting that money within that retirement plan into traditional stocks, bonds, mutual funds, you're going to choose to invest that money right back into that C corporation, your new business. So then we're going to wire transfer that cash from the retirement plan right into your corporate checking account in exchange for shares of stock. So when we have a brand new corporation, we can assume a value of $1 per share. So in this example, if your 401k plan were to invest, let's say $50,000, it's really buying 50,000 shares of stock. So it's strange to think about it that way, but your retirement plan is the shareholder of the C corporation. And now you have that money sitting in your business bank account that you could use for any legitimate business expense. Startup costs, inventory, equipment, payroll for employees, including yourself. We have many clients that will use this to self-fund their business. The great thing about that is that there is, if they do that, there's no overhead of a monthly loan payment. It helps your business to cash flow faster. Or maybe you're using a great SBA loan product that's been talked about today, or a conventional loan. But those lenders are going to require that you have equity and skin in the game. So you can use this 401k rollover, the Rob strategy, for the cash injection for that loan. Or maybe you use this in combination with a line of credit, a home equity line of credit. This can be used in combination with any other funding strategy, and we're happy to talk you through that. Benefits of a FRAM plan, I kind of already talked about that, but again, there is no repayment, there is no interest. So in this strategy, you really want to think about it as an investment. Instead of investing your money into Apple stock or an index fund, you're choosing to invest it into your own business where it can continue to grow. And one thing I'll say is we've had so many clients that end up getting a better return on investment while investing into their own business versus the traditional market. So this is not a distribution. You're not cashing out your retirement. You're simply investing it into yourself and your own business where it can continue to grow. In this strategy, there's nothing to apply for. Credit scores are not a factor. Nancy had mentioned that a lot of times on these loans, you need collateral, which is true. Sometimes people don't have collateral to offer. There's no requirements on this. The requirement is whether or not you have retirement funds and whether you want to invest them in their business. No application process. It only takes about 3 to 4 weeks to go through all of these steps and get access to funds. So it's also one of the fastest means of funding that we see. There is a link to our website, just so you can, there's a link on that, not a link, that is a link. There's a video on that link that talks about the funding strategy. There's a link there. We offer a free consultation. We really just like to talk with you and see what the best strategy is going to be for you. In that strategy, I will just mention typically, because we're creating your C corporation, filing your articles of incorporation, there's a lot of steps. It's typically a price of $4,795, but again, we do offer a veteran discount. So for our veteran clients, it's a discounted rate of $3,995. I'm happy to answer any questions we have at the end and have any one-on-ones for anybody that might be interested.
Thank you.
I might have been less than 10 minutes.
Yeah, I know. You gave some time back. Awesome. So anyway, so I endorse Rob's program. I used it for my franchise. I did it in combination with some SBA, some cash, and so forth. And it is great to be able to invest in yourself. And the way I looked at it is when I looked at my returns via the stock market, and I estimated, okay, if my franchise is a 10-year business, how much really can I be making via the stock market versus what I projected to be making year over year with the franchise. And I have the ability to start donating, contributing money back year after year, or kind of doing it in lump sum. But I saw it as also, a way to build, build up my 401k by investing in myself. So
Sure.
it's a great program. And
Well,
as Tara said, it gives you lots of flexibility because pretty much it's your cash to do whatever you want with it.
and one thing I'll mention, even for candidates that might have cash in their savings and checking to cover a cash injection for a loan or something like that, they really see the advantages of capitalizing on pre-tax dollars. So if you look at, if you made $100,000 in 1 year, after you pay taxes and everything, you're only working with maybe 70,000. So in this, if you have 100,000 within your retirement, all of that money is working for you dollar for dollar. So there's some advantages there. And in this strategy, it is a real retirement plan, one that you can participate in and contribute to. It's one that you would offer to eligible employees if you have a business that has other W-2 employees. So there are some definite advantages there as well.
And there's no interest on it. There's no, payments to be made. I mean, again, it's your money to use. And then again, your goal is to pay it back later, as your business grows and even to increase it. So thank you so much, Tara. We'll have more questions or time for questions in the back. I want to introduce Trace Reddick. Trace Reddick is co-owner of a family business called Dorado Financing. And honestly, my ignorance, I never heard about factoring until I met Trace. But what I understand about factoring is that it allows you to use current invoices of your business for cash flow. So without jumping into all the good stuff, I'll let Trace jump in and tell us about factoring and how that can benefit your business.
Yeah, Irving, thank you so much for inviting me here today, and the DFW Veterans Chamber for having me as well. I really do appreciate it. I am excited. I always get excited talking about factoring because it's this thing that nobody's ever really heard of. And in early stage businesses or not quite bankable businesses, it can be a really powerful tool. And so, when I think I forgot the statistic now, but it's like some 80% of businesses fail because of poor cash flow. And I have to ask myself, if they had known about factoring, would they have failed, right? And so, my mission is really to prevent businesses from failing and also to help them grow. And let's see, let me share the old screen here. We're going to do desktop 2. We're going to do desktop 2. And that's probably going to be the wrong one. Yep.
Yeah, we see it. Oh.
Always is. Nope. Wrong one again.
Oh.
No, it's all good. I actually, like, I'm looking at one, but I actually want to share 2. So, all right. So, all right. So my family's business is Dorado Finance. We're based in El Paso, but we serve, and most factors will serve just about any geographic area. And so one of the reasons I kind of want to give you a little context about why I'm here and why I'm passionate about the things that I am passionate about. I'm a born entrepreneur. Since I was 5 years old, I did not play nicely with others. And that became very, very true when it came time to get a job. And I couldn't really handle it, and knew from that point that wasn't going to be my life. And so I've never interviewed for a job, I've never applied for a job, or excuse me, I've never had to, formally apply. And I've just been dragged from one startup to the next, including, a pre-revenue startup for a telemedicine company that we grew to the Inc. 500 fastest growing companies list. Single-handedly raised $30 million for a cannabis firm in Florida. And then I decided to write a book about all of it and how to leverage capital for a growing business to be successful, called The Cash Factor, which is an Amazon best-selling book. And so finally it came time to say, okay, well, I need to kind of get to a resting spot here, and I'm getting a little tired of startups. And so I jumped into the family business, and now I'm helping businesses grow like weeds, with accessing capital. Okay. And so what is factoring, right? We've talked about it a little bit, but in layman's or in finance terms, it's you're selling accounts receivables at a discount. So where a business has an invoice that's a valid invoice, right? It's an asset on the balance sheet, and they need cash now to make payroll or buy more inventory, source more grapes, all these things. What we do is we will give you the face value of the invoice minus a small percent, which is called the discount, in cash. So now on your balance sheet, you have almost the full amount of the invoice, and there's no debt on your books because that discount that I took off the top is an operating expense, which can be really critical when you're talking, when you go to, folks like Marianne, and you're trying to get a loan, or even you're trying to get a line of credit, and your books are healthy, you've got great liquidity and things like that. But one of the other unique things about factoring is that we leverage your customer's credit instead of your own. So if you have poor credit, or the business hasn't been around long enough to establish good credit or significant credit, that's okay, because I'm looking at who you're doing business with and are they able to pay that invoice, or a line of invoices, right? Like let's just say $500,000 or $100,000 or whatever it might be. We're saying, if you're selling widgets to, we're going to talk about wine because there's like 5 people in here selling wine. If you're selling, bottles of wine to, do y'all have Publix in Dallas? What's your grocery store? Let's just say Whole Foods, okay?
Kroger, Tom Thumb.
Okay, so you're selling, unique wines to Tom Thumb, and they want to buy 1,000 cases a month, and so we're looking at Tom Thumb. We're saying, okay, well, can Tom Thumb justify that expenditure? Is that going to be good? And it's a really quick and easy decision. And because you're constantly, selling your AR, your accounts receivables, you're exponentially increasing the liquidity in the business. And so you're free to do so many things with that capital, whether it's, making more hires, right? If it's back office, if it's sales personnel, if it's, buying, not buying a warehouse, or maybe it is buying a warehouse, but it's using that liquidity to continue to grow the business and sustain its operations. And let's talk about a little bit how it works. So what you do is when you generate an invoice, you give it to the factor. All right, right here I have us in here because I love us, but you give it to the factor, and the factor will process that invoice. They will send you the money. It usually takes a couple hours, if that. And so you've got the cash, and you effectively get to walk away, right? You're paid. And so then 30 to 45 days later, your customer, we'll talk about Tom Thumb again, Tom Thumb remits the payment to you, but at my address or at the factor's address. So at that point, once that payment is received, that's what closes the loop. So factor gives you the money, or you give the factor the invoice pays you for that invoice, customer pays factor for the invoice, and now the loop is closed, right? And so in this way, you don't have any out-of-pocket costs, right? Versus with a loan, once you get that one-time injection of liquidity, right? Let's just, you want to make a hire, I think I heard somebody say a marketing person, right? If you want to go get a loan for a marketing person, you get a one-time injection of capital. That's it. And you're going to be paying off that capital for 5 years. And so, and it's debt on your books. So with factoring, there's no out-of-pocket costs. There's no debt. It's just a little transactional cost. And like I said, your credit is not important. It's the credit of who you're doing business with. And funding, we can approve, a factor can approve your business within 1 or 2 days, and that's just to get signed up. But after that, it's, you're getting funded in minutes. Cash hits your account in minutes, right? And there's generally no minimums, and maximums can be generally more than you need, right? Because what we do is we're in business to say yes. We're in business to say yes. We assess our own risk. We're private companies. Most factors are private. And so it can make things a little bit easier until you're bankable, right? Until you're old and you're old enough to go to Marianne and say, hey, Marianne, I'm 3 years old. I'm 2 years old. We've had a profit every year. I want to get into a more sophisticated line of credit. And then that's when Marianne can come in and say, here we go.
Trace, can you go one slide back? I want to clarify one thing.
Yes.
So in general, when you talk about having someone like a Tom Thumb or something like that, most of these larger companies that you're doing business with will have terms of 30 days plus. Some are pushing 90 days. So that's really what we're talking about is floating that time and getting cash. So you don't have to wait 30 days to 90 days based on the terms you've negotiated. Is that correct?
Yeah, totally. We fill that void, right? And we take away that worry and that angst, right? So many of our clients, when they start a factoring relationship, one of the biggest motivators for that is they are so nervous and so anxious about getting that check in the mail to make payroll, right? They are, they're growing so fast, they're doing so well that having that cash in hand is really important to make sure that the new hires they're making are paid and everything like that. Because what happens if you don't pay your employees? They quit, right? And that's never a good situation for a growing business. And that kind of goes into why would someone factor? Because you're not quite bankable yet. Like I said, you go to Marianne, you say, Marianne, I really want a line of credit. I need cash. I need capital. My business is taken off and I'm so excited. And Marianne says, well, generally we need someone to be in business for a couple years at least. And so that's where we come in. You're not quite bankable, but you're doing great. You're doing great. You can't afford to offer terms, right? By the time you get paid for like, you deliver, 5 pallets of wine to Tom Thumb, they're going to sell that wine 5 times over before they send you the check 30 days later. Right. And so what is 30 days to you? That's 2 payroll cycles. That's rent. That's so many other things. And so you're like, I can't sell you that and not get paid right away. With a factoring relationship and eventually a line of credit, you are able to afford that, and you don't have to have that worry and that anxiety that comes with extending that credit to your client. You're able to free up capital to take on more jobs, right? Because if you're going to get paid on day 0, all you really need to worry about is going and securing those contracts, right? Securing those sales, making the hires, purchasing the equipment, doing all the things to keep growing and to get profitable. And then, generally, I added this little tidbit in here. You're unaware of what factoring is and how it works. And generally, you might be looking for a loan because you need capital. And so you go and you say, hey, I need a loan. But fortunately, you're here first so you can learn about all these different great funding options. But you've got recurring costs, but you get a one-time fixed injection of liquidity, which may not be the best answer and could put you behind the 8 ball. And I always I love to brag about our clients and some of the, frankly, I'm in awe of these things. I wrote about
Tracy, is this your last?
This
slide?
is it. Yep. I love to talk about, sorry, I do love to talk about factoring. I love to talk about our client success stories. One of our staffing companies in Dallas, when they started working with us, they were doing $120,000 a year. And once they started factoring, they were able to grow to 7.2 million in annual revenue in 4 years, which is crazy. It's crazy. An excavation company, they grew 15% in 9 months. It's crazy. Another I love to say crazy. A logistics company, they grew from 1 to 30 trucks in 10 years. And when you think about, had they not been able to get into some type of a credit product, this type of growth, it would take at least double or triple the amount of time. And so you have to ask yourself, okay, well, capital costs something, but what does it cost to not have the capital? And so I'm going to leave it at that. Thanks again, Irving. And I'm so happy for all of you that you're getting some of this good education.
This is awesome. Again, I just love introducing Trace to people because, again, when you look at the full framework of what I brought to this panel, you know, no matter what your circumstances are, there's some workable tools here. So factoring is just one of those great ones that, you know, a lot of people don't know about, don't think about. Me personally, you know, didn't know about it. So happy to bring that to the table. Last but not least, I'm going to introduce Kasina Sheets. Now, Kasina, she has been in banking for many years. She has experience in lending. One of the things that she helps with is for people to assess their credit score and improve their credit score, understanding its importance in lending. So Kasina, I'll turn it over to you to talk about how you know, credit scores matter and how they happen and how they can improve them. And make sure you're not muted because I don't hear you.
Can you hear me now? Sound
I can hear you now.
Commercial. Okay.
Yeah.
Sometimes I've been having a few challenges, but when I take off my headset, I have to remember to switch that out. So let me go ahead and share my screen. And Irving, again, I appreciate you having me on. I know credit is one of those most important areas when dealing with lending, and one of the most widely asked about when dealing with funding and other issues as well. So again, my name is Kasina Sheets. I am the owner of Back Office Credit Solutions, and we're a financial consulting company. We work with individuals and business owners who are stuck when it comes to their credit and really not sure where to go or how to navigate. But I am getting ready to turn on my timer because, like Nancy, I want to make sure that I am on time. So today, really quickly, I'm going to touch on the credit score, why it's important, the breakdown, errors and corrections, what you can do to correct your credit, and how to assess your credit report. And I know that Irving, you mentioned having questions at the end, so make sure that you put them in the chat so you don't forget. And most people know the three main business credit bureaus, Equifax, Experian, TransUnion, but you may not know about Innovis. Innovis is one of the newer ones that came on the market a few years ago that some lenders are still using, depending upon which financial institution you're working with. You'd be quite surprised at what Innovis has. It covers quite a bit of information. The only way that you can order that report, and we'll go into it later, it's a little different than your Equifax, Experian, and TransUnion. However, right today, we're going to focus on those big three. Now, for credit scores, really your credit report is an illustration, a depiction of you. It's your character on paper. So when lenders are looking at you, and they only have one good look. They always say first impressions are typically lasting, and they're looking at the sheet of paper to see how you have made your payments on time, really in a nutshell. And we'll talk about the breakdown of your credit report as well. But it's an algorithm that your credit score is derived of an algorithm that they use to share the likelihood of you paying your bills on time. Now, you've often heard of, okay, I've heard of Vantage scores, credit scores, I've heard of FICO and FACO. The one you need to be concerned about is your FICO score. Now, Credit Karma, a lot of the other credit accessible or companies that provide you different credit reports use Vantage. Credit Karma is a huge one. A lot of people come to me and they say, well, my Credit Karma is showing this score, and you're telling me it's another score. Well, you have to remember that Credit Karma is really an affiliate site. They are trying to sell you credit cards based upon the information that they're gathering. And not only that, but they're using various types of benchmarks to based upon certain criteria. So if you ever wanted to look to see what your true credit score is, you would go to the FICO credit site, which is myfico.com. So the importance of good credit, and just for lack of time, but one of the areas, this particular deep dive is all about funding, business funding. Now you go to a lender, chances are if your credit score is below a certain factor, most of them will allow 640, 650 or higher, some 700 or 720. You need to make sure that your credit is in tip-top condition before going to a lender. One of the areas that I focus on before is, as an advisory, I want to make sure that you are in the best condition possible before I send you to a lender based upon their criteria. So for good credit, housing, getting your mortgage, lowering insurance premium, liability, commercial insurance, lower rates, and more attractive amortization terms, starting a business or expanding your business, various types of loans, auto loans, personal loans, you want to go on vacation, any of those, large purchases, emergencies, your hot water heater goes out and you have a large deductible. I don't know about you, but here in Texas, it's 1 or 2% of the value of my home. I don't want to come out of that, and if I do, if I have to borrow it for some reason, then I want to make sure it's an attractive rate so that it's not gouging my purse, my pocketbook. So making sure that you are set up and in the event of those types of things that might happen. And employment. Whether you know it or not, employers are looking at your credit report. If you can't handle your business, most likely they're thinking, why would I trust you to handle mine? Right? Why would I do that? It's as though you allow a family member or a friend to borrow some money and they haven't paid you back that money, but then they're asking you for more money. Well, based upon your experience, I'm not really sure I want to allow you to purchase anything. I want to provide any more assistance to you. So the importance of having good credit, it's paramount, and it connects to so many different factors of your life. So wanted to touch on that. The factors of your credit score. You've often heard, all you need to do is pay your bills on time. Well, that's true. That's a portion of it. So your payment history is a huge chunk of your FICO score. 35% of that is whether or not you make your payment on time. What else is calculated into this score? Collections, charge-offs, bankruptcies, judgments, liens, missed payments, late payments, all are calculated in this payment history. So it behooves you to make sure that you're able to pay it on time. And if you can't, immediately contact your creditor to make some sort of an arrangement to possibly prevent them showing a late payment on your credit report. Okay. Now, for the amounts owed, that is 30%, and that's really based upon utilization. So what is your balance in relation to your credit limit? You often hear keep your accounts low, keep your account balances low. And that is absolutely correct. If you're going to a lender and all of your charge cards are maxed out, then it signals to them that, hey, something's going on, something's not right. And why would we lend credit and you're all maxed out? So it just sends one of those heightened risk type of things, which chances are they'll either do more due diligence or you'll get a turn down just based upon that. And having a high utilization is ultimately going to lower your credit score. And I want to also recommend not ever closing out credit cards. Credit cards that will also lower your credit score. I know a lot of people are like, you know what? I want to be disciplined. I want to close out this account. Well, if you don't trust yourself, then close it. I don't want to put you in a position where you're going to be tempted. But if you can put it in a block of ice, if you can throw it in a locked drawer, put it in a lockbox where you have to go 10 miles down the road to grab your credit card, then so be it. Because at the end of the day, anything that is closed out is going to lower your utilization. So if you have 4 credit cards and they're all equaling $10,000 and you close one out and that one's $2,000, then now your utilization or your limits have gone from $10,000 to $8,000, which is going to lower your limits, ultimately increasing your utilization. The length of credit, how long you've had your livelihood when it comes to your credit report. When did you start establishing credit? And I often tell clients that you might have a collection, a very, very old collection, but that might be your longest standing account. And if so, if I were to, if you wanted to work on that, or if it's removed, the chances are your credit score is going to drop. The length of credit is paramount. Now, you certainly want to get with your lender, because if they're telling you exactly what it is that you need to pay off or what you need to create an installment plan or something, you want to follow their direction, because ultimately they have what you need or what you desire. So the length of credit history is extremely important. And new credit. Anytime that you are allowing someone to pull your credit, you want to limit that to at least 1 or 2 times a year. 1 really as a rule of thumb, but not more than 2. Because if you are going and allowing anyone to pull your credit, it's going to cause an inquiry, which is ultimately going to lower your credit score as well. And then the types of credit, you want to have a mixture of lines of credit, loans, and lines of credit could be a credit card, a home equity line of credit. Loans could be a mortgage loan, a personal loan, auto loan. You just want to have a mixture. You don't want to be too heavy in one and not enough in the other. So that is how the 5 factors of your credit score are determined. But I like to go into, I'm going to skip over this for a moment. I like to go into the breakdown, because a lot of people don't really recognize, they see the percentages, but they really don't know how they're calculated. So if you take your lowest credit score of 300 and your highest credit score of 850, then if you minus those, you're left with 550 points, right? So you want to take those percentages and you want to, I'm over time, Irving, that was 10 minutes. I'm so sorry. So I'll quickly go over this. But if you take 35% of 550, you're at 192.5 points in that large bucket, that payment history that I told you is 35%. So when you're looking at these percentages, and if you want to take a snapshot of this, because I won't have time to go through all of them, but you can see which bucket is heavily weighted. And so it behooves you to make payments on time so you can max out that category. And you'll see that the 10%, the allowing people to pull your score, 55 points. So that's where I come in and I share with you my recommendations based upon experience, the areas that you need to focus on to accelerate your score. And this is huge. I mean, when people look at it like this, oh, I can make 160. Now, will you max out? Probably it's only a small percentage of people who have 850 or over 800. But this gives you a good benchmark of where you need to dedicate your time, okay? Common errors. When you're looking at your credit report, you want to make sure that everything on there is related to you. If you are a junior, if you are a senior, first, second, third, fourth, I see it all the time. Father's information is on the sons. I mean, it's great to be able to carry on that name, but sometimes when someone hasn't really taken care of their credit, it can flow into you. And you want to make sure that everything on that credit report is accurate. And if it is not, you need to connect with the credit bureaus immediately so that they can take care of those errors. Now, of course, you need to have some documented proof that it's not you. You know, if you were born in 2001 and your report says it was opened in 1980, then chances are it's not you. So, but I want you to make sure that you go through and look. If you see something that is on your report, you've gotten it removed, it resurfaces. There are laws and regulations against that. Make sure your balances are correct. Re-aging of accounts, debt collectors are notorious for doing this because it resets your statute of limitations by which they can sue you for certain debt, especially here in Texas, it's 4 years. So just look at that and make sure that everything is yours. Accessing your report, annual credit report, is great. It's free. They are allowing you weekly pulls as opposed to yearly because of COVID. My FICO is on here as well, which is my go-to. Credit Karma, I mentioned that. If you just want to kind of spot check to see where you are, what's being listed on there. Identity IQ has a My Score IQ version, which now gives you FICO 8. But guys, pull your report, check to see what's on there. You can actually go to each of the bureaus directly and get your report as well. Please take advantage. And I would be very remiss if I didn't tell you, because there are a lot of business owners on here or soon to be business owners. Know your business credit report, pull your reports. D&B, Dun & Bradstreet, Equifax and Experian Commercial Credit. There are repositories such as the Small Business Financial Exchange. A lot of lenders will use that to pull information. There are so many other exchanges out there. Credit Safe, LexisNexis. Guys, y'all will be amazed at what LexisNexis reports on you. From your first house, your email addresses, your home address, your phone numbers, if you've been divorced, if you have, I mean, it's to me, I just feel like sometimes when I look at my report, I'm like, oh my gosh, I can't believe they know all that information. But make sure your business credit reports are in tip-top condition, because a lot of lenders are using that. And if you do go to a lender, ask them if they're reporting your loan or your line of credit to the business credit bureaus, because that is ultimately going to enhance the allowance in you being able to build and increase your lines and apply for more credit as well. So that is it. My name is Cassina Sheets. I'm sorry I went over time. This is the way to connect with me. If you have credit issues, I put my bit.ly there. I have a different one for business. I did not touch on the 5 C's of credit because I thought dealing with loans, somebody was going to cover that. But if you have questions about that, I'll be more than happy to answer that as well. But I'm going to turn it back over to you, Irving. And I'm sorry I went over a few minutes, but
it's all right. That was fantastic. So we have a little bit of time. Cassina, can you do me a favor? Just kind of copy some of that information, put it in the chat, your contact info and those credit, services. That way people can just kind of copy it from there. Which is fantastic. So I want to address a couple of questions. We have, like another 10 minutes or so. A couple of questions that came up. Nick asked about, do you personally back these financial options or does it rely on your business? So, those who are lenders, I'll let you talk to that. Like, for example, I think when it comes to SBA loans, I think because you don't have a business, if you're using it as a startup, I think you're personally backing it, but I'll let the experts answer that. Marion, I'll let you, answer your
Okay.
source and so forth. So cover that.
So normally, the owner is the business. If the owner was not there, the small business would not exist. So you do a personal guarantee with a conventional business loan. So, the business backs the loan, but the owner also backs the loan. And eventually, as the business grows and the business becomes really large, then you don't do a personal guarantee. But for us, as a small business, you do. So it's the personal and the business.
Yeah, and for an SBA loan, you're going through a conventional lender, and any conventional lender will do the same thing. You're going to be personally backing the loan for your business. So, correct?
Correct.
Now, with the Rob's program, again, it's your money. You're not involving any type of backing or anything like that. And for factoring, it's the the company's invoice that you're looking at, not you personally. So is that right, Tara and Trace?
Correct for the Robs.
Okay. So Nick, hopefully that answered your question. There's a question here about credit score. Where can I find it? It's, let's see. What is the credit score range to get low rates for the credit cards? So again, I'll let Mary and Nancy answer that question.
So I think Cassina talked about this too. Unfortunately for us, credit has tightened up a little bit with COVID. So our actual minimum scores probably have gone up. We used to be in the 640, 680. It's probably higher than that now. So it's really important to take care of your credit.
Does anyone have any thoughts on kind of what the credit scores are looking like these days? Tara, do you have thoughts on what's the SBA looking for, stuff like that?
Yeah, I would agree with what Marianne just said. We are seeing even SBA lenders tighten up a little bit. For express loans, when those loans are very specifically geared towards service-based businesses that you can operate from your home or a small office space, those max out at $150,000 borrowed. Right now, they're still comfortable with about a 680, but 7A lenders where it's a brick and mortar, there's a physical location, they'd like to see like a 700, but really around that 680 to 700 minimum.
Excellent. So I see, Robert, you're raising your hand. So I want to introduce Robert Gralla. Robert is going to be our guest speaker this coming Friday. He's going to be talking about the tax implications for various business structures. So he'll be talking about, an S Corp, C Corp, LLC, things like that. But Robert, did you have something to say?
Yes, thank you, Irving. And by the way, you just gave away my whole presentation. I guess I don't have to come on Friday now.
Well, I didn't tell you what the implications were. I just set up the topic.
I have a general question regarding some business credit, if it could be answered or if it's just a moot point. I have a lot of clients that have what they call the PPP loans, and it's shown on their balance sheet as a current liability. Now, I understand for credit purposes, the more current liabilities you have, the harder it is to get loans. So my question, I'm going to throw this out there. When a credit agency is looking at a company and they see they have the PPP loans or current liabilities with those, does that affect their credit score or their ability to get a loan?
Well, I'll address that. So we hope the PPP is going to get forgiven. So yeah, that's what the hope is. I mean, if they have an idle loan, obviously we're going to take that payment, but again, that payment's over 30 years. So hopefully it's, the payment is reasonable. But normally the PPP, it's not going to affect you that much because we are going to hope that that's forgiven. That's right. At least what our standpoint is.
Right. Okay. I just hope that it's taken into consideration that when the loans are forgiven, that when their balance sheet is looked at, that they know that those loans are forgiven and it doesn't affect their credit in a negative way. Thank you.
And I would say too, just from an SBA lending standpoint, because, you can't have more than one SBA loan and the PPP is a form of an SBA loan. So we have been looking at working capital loans for existing business owners and people who are looking to expand into new businesses that have current businesses that have that PPP loan. We've been able to continue to find loans for people who have PPP loans. However, it does affect the SBSS score, which is the small business credit score, which is based on some other things. So, I would agree with Marianne and hopefully they're forgiven. That's the goal. But I have seen some small effects in lowering that SBSS score if they have a lot, PPP loans, the EIDL loan and some other things. So it can factor in, but we've been able to have successful loans for people that still have those.
Okay, thank you.
Can I chime in on that? Because on the traditional side, I think as you heard, they do look at that, but there are some other types of lenders out there. When I was, helping clients, I would go to certain lenders and because they had a PPP, they were disqualified for future funding. So I think it's all contingent upon, that lender where Tracy, it might not even come into play, with the PPP. But I think everything is contingent upon who you go to.
I know. So I think there's quite a bit of time frame that lapses between getting funded and reconciling and being forgiven. So I don't know if during the time that you're using the money and the time it takes to reconcile, if that's seen as a negative, you know, because it's unknown. So I don't know, Marion, if you have any insight on that. I went through the PPP process. I got a loan for the first round, got the funds, used it appropriately, and got it completely forgiven. So I would imagine that at this point, you know, it either wouldn't show or would show as being completely paid off. But Marianne, do you have thoughts on that? Is there like a period in between between when it's funded and gets reconciled that it may be reported as a liability?
That I really don't know for sure. I think if anything, if we were counting the PPP, you know, we might put the payment in there, you know, in the debt to income. But again, hopefully the payment is reasonable enough that it wouldn't hurt them. But I don't know necessarily of a time frame.
Okay. Does anybody else have any questions? I'm looking at chat. I don't think I saw anything else, but if you're muted, unmute. Feel free to ask any questions whatsoever of our panelists.
I'd like to add, because you know there's a lot of talk with this, you know, these traditional funding options and these credit scores, and you know, when it comes to factoring, we're looking at, you know, minimum credit scores of 550, right, where that person, you know, sometimes people are even afraid to ask or apply for fear they have low credit. 550, and with this type of financing and funding, we're not looking at your current liabilities as strongly, right? That's not a huge component of our decision matrix. And so I wanted to add that for some context of what alternative financing can look like.
Excellent. Also, I want to remind everybody that there's contact information, great resources in the chat, copy and paste the information. You know, I didn't introduce myself effectively in the beginning, but I'm a franchise consultant. I'm a member and board member of the Dallas DFW Veterans Chamber of Commerce. I'm there every Friday if you want to chat with me, but if you or you know anyone looking to start their own business via franchising, I'm here. My services are free, so please direct them to me, and I'm happy to educate you know, anyone as much as I can. So that's me. Robert put his contact in there as well. Again, he'll be speaking on Friday, so you'll get to experience Robert again. If you're interested in speaking to or hiring a CPA, Patrick, Robert is there. His contact's on there. So last call for questions. We have 2 minutes.
Can I ask a question? Hopefully I don't know if it's a 2-minute one. Sorry. When you guys mentioned about, so when you're thinking about a startup business, right? And you're talking about like this line of credit, if the business clearly doesn't have a credit history, then is it totally personal credit based to begin with? I just want to make sure I was clear on that.
Yes, it would be. And there's a lot of things that we also look at. You know, sometimes we hope that maybe you have a partner, even a business partner that maybe is still working, so there's still income that way. We call it a secondary source of income, so that, because we don't know what the business income is going to be. I mean, we have projections. I mean, we hope it'll go that way, but we don't know that it will. So, and you still have debt, you know, that you have to cover, plus the new business debt. So we're looking for a lot of times a secondary source of income, somebody who's still working, or maybe you're still working and doing this part-time, something like that.
Okay, thank you.
Awesome. Anybody else? Last call for questions, please.
I have a question, and this is related to Patrick. I was reading that the small business has, I guess I'm all acronyms. SBIC is Small Business Investment Center, where you have some investors who will inject, I guess, capital for a client if they find that they're favorable, kind of like the profit or something like that. And I'm just put it in layman's terms there, but can you tell us a little bit more about that SBIC option?
Yeah, the SBA has several different lending programs, but aside from the lending program they maintain a list of investors. I don't have a lot of details on it, but they maintain a list of investors who will look at your business model, your program, and so forth, and consider you for investment where they take on a part of your company. The SBA is not a real fan and not, they don't necessarily, what's the word I want to use it? They don't promote the investor side of it because there's no way to control that side of it, right? So when you're talking about investors and folks who are taking equity in your business, there's no way to control that side of it. But they do maintain a listing of those organizations that have been partially vetted that can do that. What you might be thinking about is more, they have the Small Business Innovative Research Program, which is a grant program, SBIR. That's a grant program where if you have certain technologies or you're doing certain things in a technology space, you can actually get grants where to start, grow, and expand your business if it's in that particular technology space that they're interested in investing in. And then they also have the technology transfer system, which is a similar type system where the federal government and different agencies within the federal government will invest in your business. Again, that's related to technology and whether or not your business is involved in any type of technology that they're supporting. A perfect example would be right now in the coronavirus environment, a lot of the companies that were doing things that were related to finding a cure for the coronavirus or creating a vaccine for the coronavirus, they use SBIR funds, innovative research funds, and technology transfer funds to do that research and to get it done, as opposed to using their own money, because that's something that the government was involved in at the time. Does that make sense?
No, it makes, thank you for that. I was speaking of the first one, but I have somebody I need to send to that site. So that's good.
We're at our limit. It's 2:32. So thank you everybody for participating. Anyone, again, who wants to contact with each other, the information's there. So please do. I appreciate you all. And just a reminder, if you want to dial in on our Dallas Fort Worth Veterans Chamber meetings, go to our website, dfwveteranschamber.org. Sign up. We meet every Friday morning, 7:30 to 8:30. So a great start to your day. Thanks everybody, and have a great rest of your day.
Thank you, Irving.
Thank you.
Thank you, Irving.
Thanks, everyone. Robert and someone else had a question regarding their lender match. You can call me at the number I put in the chat, 817-272-6787.
Thank you, Patrick. Yep, it's me and Arnie.
Okay.
Thanks.